Well, once again, good morning and welcome to the weekly webinar on life insurance. Mark Hunter here at the Messer office outside of Charlotte, North Carolina. And today again, we're going to be presenting you with information to assist you in presenting to your clients with confidence on products and having the ability to generate some new business. The first point will be on housekeeping, of course. Let's make sure that you have your phones on mute. Although we have you muted out, sometimes something will slip through. Also, you'll note on the column to the right, the box for questions. If you'll have a question, then please type it in the box. We'll address those questions when we get to the end. And also, if you'll stay with us until the end so that we can let you know what the bonus will be for those who attended our presentation this morning for their eligible sales. So with that in mind, let's begin this morning. And our presenter is Mr. Dick Reynolds. Dick is with the GreatPlains Group. And we're going to present to you this morning a sales concept, something agents always like to have in their ammunition box, a way to approach your clients and to generate some business. So with all that in mind, good morning, Dick.
Mark, good morning. How are you?
Marvelous. Thanks, brother.
Good. Pleasure to be on this morning. Just a quick little background. I've been in the business 30 to 35 years, really just in life insurance. And I've spent about the last 8 years working with firms like Messer, who have multiple agents around the country, primarily working in what I would call the senior marketplace. And I've had a lot of opportunities to speak with groups, with the individual agents to show them opportunities that they might be missing when they're having appointments. I guess in your case on Medicare supplements, sometimes agents are doing annuities and they're really kind of walking by some sales. So hopefully at the end of this presentation, people that are on here will pick up some possibilities as they move forward. So what we're going to do here this morning is we're going to take a look at the market, the product that I'm going to talk about, where you would typically find the premium dollars, and the questions that you should be asking really almost every time you're wrapping up an appointment with one of your clients. So the marketplace, and you know, this is not some secret, your baby boomers, huge population, and as they pass away, there's trillions that'll be going to heirs, and the question is, how's it going to go there? Is it a taxable asset? Is it income tax free? So a lot of them every day turning 65, obviously a huge market for Medicare supplements. And then the third point, and this is kind of the key, a lot of these clients, they have some sufficient assets in terms of their retirement income, Social Security, pension, 401ks that they've rolled into IRAs, and they may not need all those assets, and a lot of them, if you ask, they've got some assets that are earmarked already in their mind to pass along to heirs. And I guess for the people with Messer, you might start by looking at your current Medicare supplement clients. And so this is going to be, this product is single premium life. So a real simple product. Nothing complicated about it. And what clients see is when you're talking to them, using an asset that they've got, a cash asset, to purchase a larger asset. So if they have an asset of $50,000 that they've earmarked, and that can be turned into $100,000 of death benefit, well, there's a $50,000 immediate growth of that asset, which, by the way, is for the heir, and it's totally income tax free by the beneficiaries. So, you know, it's not a secret that passing money from one generation to the next via life insurance is frankly the best way to do that. And I'll show you a graph here in a moment, but let's talk about idle money or leave behind money. Idle money could be money that somebody has kept in, let's say, a CD, because they really want to invest it someplace, but the rates are really low. Of course, CDs are low too, so they're not really sure yet where they might want to move that to. So idle money is probably not money that they're not going to need. They're probably going to need it for retirement, and so they really haven't earmarked it at all to be passed along. So the second one, leave behind money, that's the money that you're looking for when you're asking questions. And most of the people that you're seeing, you know, maybe don't have any leave behind money. I'm sure that there's people out there that are buying a Medicare supplement that frankly, that's a big bill that they really don't want, but they need it, and they just don't have a lot of money. But one never knows. I tell you, there was an agent that I talked to, it's probably been 5 or 6 years ago now, out in California, sort of the same conversation, and he was saying, well, my last appointment, I went out to see this widow, and she was in a house that she and her husband had lived in for like 40 years. So it's like a 1940 or 1950, you know, built house, old furniture, not much going on there. And he did a Medicare supplement with the lady. And so I got to talking to him, and I said, well, how do you know if she doesn't have any additional assets? She doesn't have any leave behind money. He said, well, frankly, I don't know. So when he went back out and delivered the policy, he asked a couple of questions, and the result was that she had about $70,000 in a couple of CDs, absolutely didn't need it, turned it into a single premium life sale, just by asking the question. So there is a difference there, idle money, leave behind money. Now, I talked about best way of passing assets. So if you look at this graph, in the first column, you'll see single premium life. So everything is a yes. It's received income tax free. Tax deferred growth, what they're referring to there is cash value that grows in that policy. You're not paying tax on an annual basis of that growth. Immediate increase in estate value, absolutely. There's no market risk involved in that. It's not in the market. And it avoids probate. So if you look at some of these other places that people put their money, income tax free is a big one on death. No, CDs no. Anything that has a gain, mutual funds, and that tax hasn't been paid because the owner died, beneficiaries get to assume those taxes. So that's, and this is nothing new here. It's been like this for, gosh, I don't know, almost 100 years. From a product standpoint, this is what a typical single premium life looks like. 100% return of premium. Now, why is that? I'd call that peace of mind. Almost all the cases that we see, the people are 65 or older. They're retired. Whatever assets they've accumulated over their lifetime, that's what they have. It's not likely they're going to receive significantly other assets for their estate. So if you have somebody who says, yeah, you know, I don't need this $50,000 or $200,000, I do want to pass it along, they might be thinking, you know what if my health changes down the road? What if taxes go way up? What if some other investments go south and I really now have a financial issue? The fact that they could always get back at least the single premium that they put into it, guaranteed. This is a big part of having these people part with those dollars. Your death benefit's always guaranteed in these products. You're making one payment and essentially you're done. There's a cash value element in the product. There's a guaranteed cash and then the non-guaranteed cash. The non-guaranteed cash simply means that you could get higher crediting rates over time above and beyond what they're guaranteeing. So your cash value can grow to much higher. Chronic illness, long-term care, big topic. in the senior marketplace. Totally different sale, but this product features a chronic illness benefit. So if somebody is needing home health care, somebody is now in a nursing home, both of which cost money, this product will pay out, once you qualify, the product would pay out a chronic care benefit for those types of expenses. And essentially you file the claim, they get the doctor's records, it clearly shows from the doctor that they cannot do 2 of the 6 daily living functions. And so they're going to qualify. So that's kind of an extra benefit, and it's a big topic on people's minds. Along with the fact that people are also concerned about living too long. So they like that. Another simple part of this, there's no exam required. No nurse coming out, taking your blood, asking you questions, doing your height and weight. You're answering health questions on the application. There will be a phone interview. They're going to review really what you had reviewed. And they also have a way of determining whether somebody, really has some form of dementia or beginning of Alzheimer's, because they would not take that individual. Next screen here, what about underwriting? Most of these cases, you got 65 to 75, that's the typical range. But don't assume because they're older that they all have big medical problems, because they don't. Underwriters are really looking for major impairments. And I'll give you an example. I got a 1-sheet piece of paper here from the carrier, which you all can carry around. So I'll give you some quick examples of where somebody would not qualify. So if you have Alzheimer's or something like muscular dystrophy, doesn't make any difference how long you've had it, you're not going to qualify. Then they'll go to, in the last 10 years, COPD, chronic obstructive pulmonary disease, which is a breathing disease. If you have that, you wouldn't qualify. Cirrhosis of the liver, congestive heart failure, coronary artery disease, kidney failure, leukemia, those are all major impairments, and you wouldn't assume somebody would qualify. Then if you go and you look, have you had the following in the last 5 years? Cancer, where you have metastasis. Well, that does not mean skin cancer, which you can get from the sun or outside exposure, like a basal cell or a squamous cell, which are not bad cancers. So it wouldn't be that, it would be major cancers. Heart attack, pacemaker, stroke, excuse me, those would mean you would not qualify. Now, on cancer, I see a ton of cases where you have a male with prostate cancer, okay? Well, if the prostate cancer was treated more than 5 years ago, now you're going to qualify. And a couple of items in the last year or less where you already can't perform 2 of the 6 daily living functions, or you're in the hospital, or you're receiving hospice care. So that leaves all kind of issues wide open. We see a lot of cases where man or woman, they're taking BP med, cholesterol meds, thyroid meds. They might be taking metformin, which is an oral medication for type 2 diabetes. They all qualify. So what you'd be doing is if you've got somebody interested, you're just asking some questions. And you would have this sheet available to you. And also, if you're interested in trying to make these additional sales, I would always have an application with me, because on there you'll also see the exact medical questions you'd want to ask, and it probably takes about 4 or 5 minutes to go over it. Carrier is also going to check MIB, scripts, and driving record. And that's the extent of it. Rarely, maybe 1 out of 100 cases, would they write for doctor's records, and frankly, they're only going to spend their money to do that if they think that once they get the records, that person would be approved. So let me go down here to the next screen. And we're going to go through, about 3 common sales. And these are actual cases we did. So the first one here, we've got Mary, who's a widow. She's 72. She's got pretty good retirement income, some annuities, some CDs, totaling $77,000. She's already earmarked that to pass to her 2 sons. Now, how does the agent know that? He asks questions. So, knowing her situation, he spoke to her about a single premium life policy. So, if she put the $77,000 one time into that policy, the death benefit becomes $119,000 and change, guaranteed. The sons get that higher number, totally income tax-free. Remember, we've got a return of premium, so she could get back at least the $77,000 or more if she needs it. There's a nursing home benefit, no exam. He went over some of the health questions. There was nothing significant. She qualified. Case was completed in a week. This is a typical case. In this case, money came really from the CDs. Next case, here's an agent who sells annuities. That was his typical appointment. And he saw this lady. She was 68. She had an annuity, and she had the opportunity to move it because she'd had it long enough. So she put in $120,000, and her gain was $19,000. He wanted to move the annuity because that's his typical sale. She didn't want to do that. And, you know, she did say that she didn't need further growth. That wasn't really the reason. Her real reason was, again, concerned about medical bills if her health declined in the future. So she just wanted that in the bank. So he shifted the conversation to single premium life. So after taxes, she would have $133,000. So she lost $6,000 in the annuity. That would seem like a negative, for sure. But if you look at the math here, that $133,000 created a death benefit of $226,000. That's a $93,000 gain immediately. So 226 was a whole lot better than 139. She understood that. That particular sale had a chronic care benefit of over $6,000 a month. And again, there's the return of premium. Another typical type of sale. So the last one I wanted to share with you, this is kind of interesting. We see this from time to time. Here's Bob. He's 70 and widow. He's got a daughter, and he's got a CD for her of $75,000 when he dies. And so the agent, instead of trying to take the whole thing, he said, well, how would you like to be able to continue to give her $75,000 whenever you die, but free up some of that money? You can spend it any way you want. And that's exactly what occurred here. So the $75,000, what we did was we took the death benefit and we said, how much of that single premium do we need to give her $75,000? Well, that was $51,000. So he has an extra $24,000. I don't know what he's doing with it. Maybe he's traveling, maybe he's playing golf, I don't know. But she maintained her $75,000. He has another $24,000 in the bank to do whatever he wants to do with it. So that's not the typical sale, but that's a variation of this thing. So where are the premium dollars found? Where are they typically found? CDs, a lot. Money markets and annuities. So the annuity would be, you're probably going to have a gain. There's going to be some tax there, but we're going to compare the value of that annuity to the death benefit. And so you're looking for liquid assets. Now, you know, sometimes somebody's got a insurance policy. They don't want to pay any more premiums on the thing. There is some cash value. Sometimes we'll see a 1035 of the cash value representing a single premium, you know, putting it into this product. Not normal, but that they are liquid assets. Okay. I talk to agents about this all the time because a lot of times, you know, they're focused on selling the med sup, selling the annuity, you know, whatever their appointment was about. And I tell them, I said, as long as you have a rapport with these people and you're already out visiting with them, and maybe you sold something or maybe you didn't, it doesn't preclude you from, you know, asking a couple of questions, because typically people are going to answer the question. So if you look at the first one here, do you have any cash assets? You probably won't need for retirement income, and you've already set them aside for your heirs, like a CD or a money market or maybe an annuity that you don't have. You just wait to see what the answer is. I mean, obviously a lot of people don't have that, but if you have 10 people and you ask that to 10 different people, you might see 1 or 2 sales out of that. Another way, do you need all these annuities for retirement income? Because really what you're just trying to find is, you know, what's the financial position of this person here? And then a last one here, have you ever looked at a product where you can put in some money one time and you have it guarantees that it immediately will increase, which is obviously your death benefit, for your heirs, and they receive an income tax free? You'll get an answer. And these are just sample questions. You could ask them 100 different ways, but I think the point I'm trying to make here is it behooves you to ask the question, because potentially over the course of a year, you're going to put a whole lot of more dollars in your pocket by asking them instead of not asking them. And I've got a lot of agents who, excuse me, have done that, and they continue to do it, and they'll sell, you know, some of them will sell 4 or 5 of these a year, some of them will sell 15 or 20 of them a year. Here's a key: knowing your prospect's focus. So once a person determines they no longer will need all their liquid assets for the purpose of retirement income, more often than not, their focus always shifts to wealth transfer. Wealth transfer to their loved ones, their grandkids, their sons and daughters, if they can possibly do that. So the key here is where are they on their focus? And you find that out by simply asking questions, because everybody's got to focus. And so that's really kind of the you know, key to this whole thing here. And here's what we know. Market's huge. Many, and this is interesting, many prospects have no idea this kind of a product exists. Why? Agents don't ask questions. I'll tell you another reason why. You have all these no-call lists. You have people jamming emails with who knows what. And there's all kind of rules and regulations now of what you can mail out to people. So frankly, the buying public in any market, you could take a 30-year-old or an 80-year-old, they just have no idea of all the different life insurance products and riders that are available to them. So more than likely, if you're talking to somebody, they have never heard this product. Another thing we know, it's a simple to understand sale for the prospect, and it's got a lot of guarantees. Not a lot of moving parts with this. Clients can increase and protect the money they pass along. Nothing wrong with that. And people are buying it. We get plenty of applications in here. So do other firms. And we know people are buying it. So that would be the essence of my conversation, because it's so simple. and open to any questions that anybody might have.
Thank you very much, Dick. Wonderful information session with us. Kept it simple. Brought up some very important points that agents and myself need to have as we go out and meet with our clients. Typically, as we have in the past, just touching on a couple of high points that was brought to our attention. The 100% premium return, that's certainly a safety net mentally and emotionally to a client when those monies come out, that they can know they can get them back. When we add on that benefit of the acceleration for the chronic care, a lot more clients today considering that need, but recognizing the fact that the cost of true long-term care really puts a dent in their amount of funds available for their daily living. So here again is a product that answers that need. The simple no exam portion, the fact that, again, if you just take your application and review it, if you unfortunately do get a yes answer to one of those health conditions, well, obviously you don't want to complete that application. It's not going to fly. But again, it's that simple, which is really also very important as we know as agents. Probably the most important part of today's information was asking those questions, just finding that money in such a simple, non-threatening way. As you pointed out, Dick, it's very probable that most clients have never heard of a product that they can make just a single deposit and have a guaranteed higher return on it and be income tax free. I mean, that's as strong as you can get. And that's, of course, what we have the benefit with the products offered today as single premium life. First of all, to all of you agents, of course, if you're not working with us today, please do contact us. We'd love to work with you going forward. We'd like to get you appointed with a couple of carriers. We'd like to get you involved and use our E&O. That's a very affordable product for you. And also, again, that everything we've talked about this morning has been recorded. So you can go back and review it quickly. You'll be able to pick it up on our Messer website right under our Agent Resources tab, which is at the top of our homepage. And you'll go to our Learning Center. And from the Learning Center, once this is downloaded, which will be within the next 24 hours, you'll be able to pick up this information and use it most competently. I don't see, and I'm going to go back and review one more time, that we have any other questions coming out this morning. So again, I think you did a great job, Dick, keeping it simple, sweet, to the point, and giving us an opportunity. Agents out there today, again, if you have an opportunity to work with this product, you need some assistance perhaps just on the illustration, that's what we're here for. And then, of course, if you're fortunate enough to be able to put one of these together with us in the next 30 days of the date of this presentation, Messer Financial will add an additional $100 bonus to your commission for the sale. So certainly well worth it, but that's only available to the agents that have been registered and are actually attending this presentation today. Dick, once again, I just want to say thank you. I know we're going to have you back with us once again. And everyone out there, I hope you have a great day, and I hope you can bring us some good business. Dick, thank you again.
Thank you, Mark.
All right, everyone. Till next Wednesday, see you again.